Before we get started, I need you to do me a huge favor. You see that little bell right there in the corner? I need you to tap it. Make sure you are subscribed. All the things I have to share with you could literally make you thousands of dollars. I don't want you to miss not one video. I made it as easy as possible. Tap the bell and we will get going. Does Tom Lee have a crystal ball for the stock market? We are going to look at what he said just a few days ago and compare it to the CPI read that we just received today. And then I want to take things a step further. We have a very important read tomorrow that with CPI data this week, I don't know it's gotten the attention it deserves, but it's the jobless claims read. And I want to bring your attention into something really peculiar that I saw. And let's look to see how that could affect us and whether or not we will be in a full-blown recession as these jobless claim numbers progress. I think there's something we need to watch out for, and I want to bring it to your attention. And finally, as always, I want to take you through a few key trades that actually made us some really good money this week. I was able to make over $10,000 trading this week, and it has a lot to do with the high volatility that we have going on right now. We have seized the day and we are taking full advantage of this because I intend to continue to cash up in my portfolio. So I'm using my current cash to generate new cash. And then I had a really fun trade today that actually allowed me to give a timeless gift to my daughters. And I wanted to explain it and share it with you so that you may want to do something similar for your family. Well, let's listen to what Tom had to say.
You suggest the worst is behind us. What makes you think that?
Well, I think the thing that we're watching is the VIX spike to 60 on Monday, which is the third highest reading ever, and the VIX futures curve inverted, which was the steepest inversion since the pre-pandemic times. Both are starting to normalize. I think the VIX, as it closes below 20, and it hasn't closed yet, and as that VIX futures term structure uninverts, that tells us the worst of the panic is behind us. I don't think it means we won't have ripple effects because we know there's some trapped bulls and, there's still some nervousness around Iran and how much of this yen carry trade has to unwind. But I think the worst of the selling pressure is behind us.
How do we know that we had just a growth scare and not something more dramatic to come, Tom? Never mind the unwind of the carry trade, and no one really knows whether that's over either. But when you think about those two events, what does it make you think about where we could go moving forward?
Well, I think investors, when it comes to the growth scare side, have something they can check every week, which is weekly jobless claims, because that's what was a positive surprise on Thursday. And a lot of it came from Texas. Texas had a big drop in weekly claims week over week. The fact that markets reacted so positively Thursday to that jobless claims number puts me in the camp that that's one of the big drivers, because we had a better than expected claims number and then the market popped. I think the growth scare is what's on investors' minds. And next Thursday, they'll get another weekly claims number. And if that's also equally improving or stable, I think it's going to give people a lot more conviction.
Let's unpack a few things. Now, I know the CPI report was good news, so the market did enjoy some positive action today. But when you look a little bit deeper, there are some concerns. Let's look at something like transportation, shelter, electricity. These are things that are non-negotiables. Americans have to live and they have to have these things, and those are still extremely high. When you look at shelter, rents up 5%, electricity up almost 5%, and then transportation up almost 10%, those are significant, and that hurts our consumers. And so I wanted to make sure that we looked at this. And then if you look at food away from home, so some may say, yes, that's not critical. But for people that are working, that may be their only option is to pick up food away from home. And if it's up 4%, this is hurting Americans. Medical care. Now, one might argue that with medical care, that can be stretched out over payments and things of that nature, but still 3% is significant. Now, let's look at the more discretionary items. So used cars down at 10%. This is showing you right here that people are not spending money, because when everyone was clamoring for a car, when everyone had a lot of money and cars were in short supply, Those prices were going through the roof, and we knew it. We felt it. Gasoline is down. That's positive. New cars are down by 1%. There again, this shows that the consumer is not being frivolous with their spending. So there are some concerns on the horizon that I wanted us to consider. Now, I want to go and look at what happened in 2008, because I don't want us to get too comfortable that we're not cashed up enough for the opportunity if we end up having a spike in unemployment. So I don't know what the read is going to be tomorrow, and it may be a modest rise, but I want you to look right here. This was in 2008. That purple dotted line was in 2008. Then the yellow line is where we are now. Look at how quick unemployment accelerated and took everybody by surprise. If we hit 5% unemployment, that is a significant concern, and we will be deep in a recession at that point. So I don't want any of you to ignore the unemployment number or think we're out of the woods. It is important to look at this, and I only tell you this so that you're prepared. When you have cash to the side, my recommendation has always been look at least 25% for opportunities when the market pulls back significantly. Your portfolio will rebound a lot quicker if you were able to purchase stocks on a steep discount. Speaking of, let's take a look at after Monday's lows, how quickly stocks rebounded. And this is why I encourage you to get your cash ready. NVIDIA up 28% from the Monday lows. Bitcoin 24%, Meta 18%, and down the list we go. This illustrates how quickly your portfolio can rebound if we have significant pullbacks. You just have to be ready. So it's not just having cash in your bank. You want to have it in your broker ready to strike if we do get a significant pullback. Now, let's go look at the trade I made today. This one was particularly fun. Just a few days ago, I had done a video that explained how you can sell a put on a stock and then go and purchase the stock. Well, one of my members had reminded me of that after I learned this trade, and so I went and did exactly that. Lululemon has been beat up quite a bit. I have 3 daughters that are heavy consumers of the product, so I know it is a quality product, and I know the social status that comes with wearing their brand. As a result, I believe these are just short-term growing pains, and it will come back. At one point, I was gladly purchasing this stock when it was in the high 300s. I sold a $230 strike price put that expires in December. Now, if you know my trading style, you know I like to go further out. And then when a stock rebounds, I typically buy this back much cheaper than what I sold it for. And that helps be able to garner more premium than you typically would. Plus, it makes the trade a little bit safer because I'm going further out, I'm allowing for recovery. And because I'm going further down, I don't have to use as much capital. So I settled on that $230 put. It expires in December, and for that, I received almost $2,000. So I took that money and I went and purchased 2 shares of Lululemon for each of my daughters. And here's me announcing it to them via text, because even though they're sitting in the next room, this is how we communicate with our teens nowadays. And the last thing I wanted to bring to your attention is the power of rolling. I have a great video on this. I will link at the end of this video. But one of my members had a great time today. He gained an additional $4,500 for rolling some of his NVIDIA plays. And this was when NVIDIA had pulled back significantly, and now it's on the rebound. So rolling is truly a game changer, and it's one of the main reasons I love options so much. It's a safer bet if you're with a quality stock, because you can keep pushing this stock out and down until it has price recovery, and then you can usually get out for a pretty good profit at that point. If you are tired tackling these markets alone, you really need to consider joining my trading community. I had a special note from someone just the other day, and they were asking me how I find so many great trade setups for all of the different trading that we do in the Discord. And I shared with them all the different things that I watch and how I scour the market day in and day out. And his comment to me, his exact comment was, wow, we really get our money's worth, because I don't have time to do all that research. So let me do all the research for you, and then I will turn it over to you on a silver platter, and you can create your own fortune. Now that you have all this wonderful trading knowledge, you can go relax for the rest of the day, go sit in the grass and enjoy the sun. I'll see you tomorrow.